Hello, welcome to another episode of Market Maker Mondays. I'm the Nomadic Trader. The date today is Saturday, the 4th of March. So I just wanted to bring your attention to what we were outlining in the previous video. So we had actually discussed that we've got this bullish order block here on the weekly time frame, but more specifically using the new teachings from ICT, which he is yet to go into in detail, which is the consequent encroachment of the wick. You can see that we've had a beautiful rejection there. So on the weekly time frame, we've rejected this key level, we've pushed high, and we've actually closed right at the high, indicating that we could potentially see a continuation. However, we will also need to see a 1, 2, 3 candle swing here. So if you see 1, 2, 3, and then obviously we move higher, 1, 2, 3, and then we move higher, 1, 2, 3. So we've got 1, 2, and then we don't actually have confirmation just yet. So these are going to be the key levels for me on the weekly time frame. And going down to the daily, you can actually see just how well we've respected it. We've got this BISI here, this fair value gap, and we've completely closed it to there. And then we've had a bullish engulfing. Well, where we're actually trading to now is back up into a premium. So in terms of the premium PDRAs, we have this level, and then we've also got this here, as well as this volume imbalance. So I'm going to have these drawn on my charts. Just like this. Okay, and then just delete this range off. So this was Friday's candle. So when we're having a look at the price action that ensued that, so we've rejected this key level here, we've traded higher, we've taken the previous daily high, which was then induced liquidity. We've traded back up into this daily fair value gap, or SIBI, and then we've actually then taken the low from here, and then we've traded below this low. So this was actually this low here. Sorry, where are we? I go up to the monthly time frame. So this was the previous month's low on the 24th. So we've taken now on the 1st of March, we've taken the previous monthly low. And then what we've done is we've traded lower into this consequent encroachment, and then we've actually traded back up above this key level. Then we've traded back down again to find some support, and then we've traded higher into this region. You go down to the 4-hour time frame. We were actually anticipating the reversal from here. Price was actually here in the previous video. So what we've actually done is we've found resistance here. We've pushed lower, we've taken the previous month's low there, then we've traded lower, and you can see how well we've respected that weekly consequent encroachment. So we've respected it really, really well. And then if you wanted to fine tune that as well, because we are observing this on the 4-hour time frame, we've got that BISI just there. So once we've actually traded down into that, we've taken the sell side liquidity. We've actually got this 1 hour and this 15-minute advanced market structure reversal here. So we've actually got nested short-term and intermediate term lows, which actually then create a long-term low. So as soon as the tide starts to turn, we've traded into this 4-hour BISI, then we've actually traded higher. So I actually saw this as a end of week reversal. and I managed to eke out some profits in this leg here because we're actually pushing up higher into that overall objective. And then when we compare that on the dollar index, so this is the dollar index down here at the bottom, which I actually use for confirmation. So we were in a real urgency on Friday to trade up and to fill in this volume gap. And then as soon as I actually saw that rejection here on the volume gap and prices pushing higher, I knew that we were actually going to be continuing on a Friday close. So we'd actually taken the sell side liquidity here, if you see that. So we've taken the sell side liquidity just there as we've actually come back in to trade within this. I don't know if this is rebalanced. I don't know if the actual bodies need to be showing here rather than just a wick, but when we actually went back up here, so when I saw that basically there was an SMT divergence between this and what the dollar was doing, because if the dollar index is going up, then we expect the indices, the US 500 or ES, to be going down. So when I saw that cracking correlation and we actually took out this swing low here, we've taken the sell side liquidity, and then all we've done is we've just pushed up higher. So this was actually a great opportunity on Friday. So what do I expect to anticipate moving into the following week? So this to me looks like an advanced reversal, and this looks like it just wants to continue pushing higher now. So if that is the case, we've actually got this confluence here, which will actually put us back up into a premium. But when we go higher than that on the weekly time frame, we have this volume imbalance here. But for this purpose, all I'm going to do is I'm just going to have the upper boundary of this bearish fair value gap, or SIBI, just there, and then the old swing high just there. So that's actually going to give us some objectives. So we've obviously got these as well to take out, but I think we will just, if we do continue to push higher, if we trade above the previous week high, which is this one here, so previous weekly high, if we trade above this, we actually fill in this volume imbalance here, and then we actually start to see this as support, then the next objective is going to be on the daily time frame, this old high, come and rebalance this volume imbalance here, and then continue to push higher to close in this range, and then to take out this high. So it does actually look bullish to me. Overall, I think we can expect to see higher prices. However, when we look at the dollar index, I actually had this key level drawn in. So what we did, this is Friday's candle, the previous week. We'd actually taken the previous high here, so the previous day and the previous week's high. We've used that buy side liquidity. We've traded into the consequent encroachment of the daily wick, and then what we've done is we've actually had this push down. So at the moment, this is actually just consolidation. It does look like it wants to go lower to me. However, if you go to the monthly time frame, excuse me, we've actually got this bullish engulfing candle here. So if we were to delete everything else, we've tapped into this liquidity. It's now March. So to give us, March is swing high, which would be candle 3. It could be anywhere from where it is here. It could continue to push lower. We could also come down to retest this level here to provide the wick. So we've got 1, 2, 3 swing low to then push higher. It's difficult really because we've got bullish structure. We've rejected this here, but if you zoom out even more, this is the high, low, and then effectively we've had a major reaction to this level here, which is the mean threshold of the bearish fair value gap, or the CB. So quite a few things going on really. On the monthly time frame, as I say, it's the 4th of March. So we could trade lower. But when we're looking at the momentum, we've come lower from the consequent encroachment of this daily wick. But then we've actually started to come off the bottom. So the end of last week, yes, we traded lower, but then we've actually come back up to close into the range, which if we were bearish at this point, then that wouldn't be a great sign. So I do have my reservations there, but we could come lower to here, which would actually give us this inverted head and shoulders, or this advanced market structure, which would actually give us the right shoulder here, which would actually be the bullish order block on the monthly time frame. Before then, we want to push higher. So if we're actually having a look, so although this is actually just thrashing backwards and forwards, what it's actually doing is it's building orders, and we could actually see some more movement of weakness in the dollar as we push lower to maybe reprice to here to then start to push higher overall. Or if we don't see a reversal here, then we could just continue lower, and we could actually be looking for lower prices. Now, last week, ICT did actually say that even though we saw that price action unfold on last week, his opinion hasn't changed. So he's actually bullish on the dollar and is bearish across all other instruments, and that includes the S&P 500 as well as the Forex for you Forex guys. But I think what we need to do, trading on the US 500, this is really difficult to ignore. So I'm going to be anticipating a continuation into Monday, Tuesday next week. And we're going to come and test some of these levels. And then if we do actually start to see some respect here, so we've actually traded above the mean threshold. So I would actually like to see this level held. Maybe if we just wick down a little bit into this fair value gap, and then we continue to push higher. If I'm bullish on this into next week, then I actually want to see this level or this level hold in price. So at the moment, this is just absolutely impulsive. There's been no relief whatsoever. So we could see some relief, and we could see a pullback and then come back down to this level, and then we could then have another push up to the upside. So hopefully that has been insightful to you. I am actually working on the components for creating a trading plan. So if that is something that you would be interested in, please leave me a comment in the comments section below. And what that will involve will be how to design your own trading plan, and also the perils of not using a trading plan, because ultimately you need to know exactly when to enter the market. You need to know exactly why you're entering the market. And you also need to be aware of when not to enter the market as well. So those are all key factors that are going to go into it. At the moment, I just use Evernote for my trading plan. But what I want to do is I actually want to do an overview video of what my plan involves. And then I would do a mini series then contained within that playlist of each of the components explained in detail. And I'm going to cap them at about 10-15 minutes long each episode. So if that is something that you'd be interested in, please leave me some feedback in the comments below. And if you've got any value from this video, then please make sure that you subscribe and like the video, and also share it to your fellow traders. Okay, then, thank you very much. Until next week, good luck and good trading.